Hello everybody, welcome to this week's live stream. I'm David Jones. I normally do these every Friday at 2:30. So we've had the market open, just opening now, isn't it? We had the payrolls an hour ago. The US unemployment numbers came in much lower than expected, I think, didn't it? Was the market expecting about 170,000 jobs to be added? And I think it ended up being 114,000. So we've seen a bit of a reaction from markets. I mean, stock markets, a big sell-off yesterday. This is the Nasdaq. We'll look at these in a bit more detail in a second. That was the reaction over the payrolls. So the Nasdaq lost a couple of hundred points. It looks like, it's clawed back half of that loss, but I think it makes for an interesting afternoon ahead. Oil was off a fair bit as well. Where was that when the payrolls came out? That was about $76 a barrel. So that's lost more than $1 in the last hour. Let's see what it all looks like. So if you haven't attended one of these before, welcome to this one. I run them every Friday, like I say. And what we'll do, we'll take a look at the major announcements for next week. And then we'll jump onto the charts and have a look at the usual mix of markets, indices, FX, commodities, energies, gold, silver. I think gold is making all-time highs. Is it there? Oh, not quite. It's about $15 away. So I'll have a look at all of this stuff in a bit more detail. Yeah, that's it. So before we do all that, let's just get the housekeeping done. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation, or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread betting, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. I should say, of course, if there's any markets you want looking at, if you put them in the chat, in the question box thing, on YouTube. Once we've looked at the usual markets, we'll take a look at any stuff you want looking at. And lots to look at today. Yeah, it was a brutal day yesterday. I've had a good week trading. And the thing and talk about some of my trades in a second. I'm just responding to one of the comments. The thing I'm kicking myself, I should have gone short the S&P. The first 15 minutes yesterday, it was a short signal for me. And the S&P, up, where was it? So this is like a therapy session for me now. Up here, about 55.50 was a short. Didn't take it because I was faffing around with everything. And because it went off in a straight line, there probably would have been like 120 points in that trade for me. Not that I'm bitter about it, but it's been an okay week anyway. But I'll talk a bit about that actually, the psychology behind that, because as we all know, trading is psychology plays a massive part of it. Anyway, one of the things I do, so I do a few other things. I've got this YouTube channel. I run some training courses. Find out details on my website. I run a WhatsApp group that's quite popular with updates from me throughout the day, talking about the trades I'm doing, what goes on in markets. I did a webinar for those people on the WhatsApp group just over a month ago now on understanding options trading. I think options trading is a really interesting approach to markets, a bit more considered than perhaps click buy, click sell. The basics of options, why options aren't usually very good for trading direction, although it would have done very well yesterday because of the explosive move we had yesterday, and other option strategies and managing risk using options. So I ran that. It's about 90 minutes long, that options webinar. If you'd like to see it, all you need to do is join the WhatsApp group for a month and I'll give you access to it. So if you join the WhatsApp group, you can try that. I'll give you the details a bit later on. In this and a discount code and all that stuff, but yeah, join the WhatsApp group and I'll send you that. I also did one 2 months ago that was just under an hour on my day trading approach, which highlights the signals like the one I didn't take yesterday. So if you join the WhatsApp group, you get those 2 webinars, which are well worth more than one subscription to the WhatsApp group. All the details are in the description. So next week is a bit of a quieter week. To be honest, we've got the Aussie interest rate. I struggled to find anything really interesting. We've got the Aussie interest rate on Tuesday and we've got China inflation on Friday. I mean, this week we've had Bank of England yesterday cut rates, US interest rate on Wednesday, and earnings, loads of earnings from the big ones. Apple, Amazon, did they do it? Microsoft, I can't remember. And Intel last night got hammered, didn't it? And the non-farm payrolls today. So today has been a busy week. So next week is a bit quieter. I run this WhatsApp group. It's a morning update and an afternoon update from me. Markets I'm watching, trades I'm thinking about doing, trades I'm running. I did an oil short yesterday. I did flag that up in the WhatsApp group. If you go back to the video I did on Wednesday on the channel, I talked about shorting oil and I sold it yesterday and it has worked. It's worked really well. It's really, really logical trade to do. But I did hum and har a bit about that one. We'll have a look at that in a second. And a Q&A as well. So it is like a little, it's not just, I think the FTSE is going to do this, I think the FTSE is going to do that. I think there's lots of value I try and add with my experience. As I often say, I don't know everything, but I've been doing this for a long time. So I've got an opinion on most things. But if you join the WhatsApp group and use the code YouTube, you get 20% off the first month. And to do that, go to the website, davidjonestrading.co.uk. You'll see details of the courses I run. Go to subscribe. You can join the WhatsApp group and I will give you access to those 2 webinars on options trading and day trading, my day trading approach. And if you're not on the newsletter's free. I send it out every week over the weekend. So if you go there and on the homepage and put your email address in, if you're not in the newsletter already, and we'll do that as well. Very good. Right, blah, blah, blah. That's what the WhatsApp group looks like. A lot of stuff from me on things to watch. It's quite an old update, but that's what it looks like. My trading course has got 5-star Trustpilot reviews. I do the newsletter, like I said, and it's all on the website. I do need to revamp the website, so I might get around to it before the end of the year, but everything else is in there. Right, let's take a look. Let's take a look at the stuff. Look at the stuff. It's been a heck of a week, I think. I came into this week, I think I mentioned it in the newsletter. I bought the S&P last Friday. When was last Friday? Here. So I bought it here with a stop under the Thursday low. And the market went a bit sideways, blah, blah, blah. And then Wednesday, it got a move on. So I trailed my stop up and I came out of that yesterday when that sold off. So it had been a good week for the S&P. I should have gone short yesterday. But anyway. But I think I think it's going to be a really interesting day today and an interesting week next week, even though there's no data coming out, no major data. It'll be an interesting week next week. We're now trading on the S&P where it was in June. We broke this support. This 53.90 level was a bit of a level. So we've broken that today. And it does feel, I think as someone said in the comments, it does feel quite brutal. And it does, but in the great scheme of things, we're only, what's the lowest it's been today? 53.50. The all-time high was 56.70. So it's only 300 points off the all-time high. It's 6% or thereabouts. It's fallen 6% in the last 2 and a bit weeks, which is, a sizable fall. We'll look at the Nikkei in a second. That's been clobbered. But in the great scheme of things, the trend is still up, but I think if you're anything like me, if you watch it closely day to day, it can all feel a bit manic and quite bearish at the moment. But anyway, this is the first time we've seen the S&P break that uptrend that's been in place since October last year. So perhaps that's a reason for some to be concerned. But I would only, for my own investing rather than trading, I'd only start to think, the stuff is hitting the fan if it breaks through the May low. So I think it's going to be an interesting week next week. I am sort of expecting some strength to come in. It'll be interesting to see what happens today. And that's it, really. So, but, it has felt like a bit of a brutal start to the month, and it's only the 2nd of August. So we'll see what happens. But looking a little bit negative, perhaps a bit of an understatement that. That trend, that downtrend off those highs is still going. I did think the strength we saw on Wednesday, I thought, it's broken the back of this correction now, and we're going to have a bit more of a calmer time, and perhaps it goes to have a look at all-time highs again. And that was the reason I didn't take the short yesterday, because I came into it yesterday with too much of a mindset of expecting the market to go higher. I should have been a bit more zen and have no opinion and see what played out, because I thought it was interesting that we did see, in the first 10 minutes yesterday, 20 minutes, the S&P broke the previous days, broke Wednesdays in in session highs, but reversed, and that for me would have been the signal. But anyway, let's see what happens today. So yeah, pretty exciting week. I don't think the uptrend is over just yet, but it is, it's definitely weak going into today. So let's see what the next 6 and a bit hours end up being like for US stock markets. If we look at the Nasdaq's had a bigger decline. We've seen more of a hit for tech stocks. What's the Nasdaq off? So the all-time high was 20,790. It's traded as low as 18.4 today. So the Nasdaq's off about 11.5% in the last 3 weeks. 3 weeks and 1 day, which again, it's a sizable sell-off, isn't it? So again, for me, going into next week, I think it's interesting, these lows, probably that low there. What's that low? End of May, 18,190 or thereabouts. So let's call it 18,000. Let's say 18,000 area is an interesting one. It is still in the trend that started in 2023, that saw this market almost double into those all-time highs. So again, that is a heck of a move in 18, 19 months, isn't it? But here we are. Let's see what happens. So I am expecting some strength to come back in. It's not quite coming back in today so far. Let's see what the rest of today and next week looks like. The Dow has been a little bit different. The Dow has, if you look at the Dow on the hourlies, it's interesting, because we've got clearly the tech stocks are getting hit, which means more of a sell-off for the Nasdaq, but also impacts the S&P, but impacts the Dow less. The Dow is still down, but it's interesting that the Dow is still holding above the lows from the end of last week, just around about 39,800. So doesn't look as anywhere near as bearish as these other markets. The Russell, the small cap index made a new high for the year on Wednesday. The highest it's been since November 21. So that was a 2.5 year high. And again, has got clobbered today. Interesting to see what happens there. I'd be inclined to be a buyer of the dip so far on that one. So let's see where it goes. But loads to watch in these US markets. So we'll see how it all turns out as today and next week goes on. What else can we look at? FTSE as usual, doing its own thing. The FTSE 100, the UK stock market index, very sideways through June and July, with a little flurry of excitement, and now it's dropping back into the range. I hardly ever look at the FTSE. The trend is absolutely up since October 23, but yeah, not that exciting for me. The Aussie index, I've been long the Aussie index since back here somewhere, and it broke out to all-time highs yesterday, and it's dumped today. But again, on the Aussie, I would say, depending on where we take the trend from, the trend is still up. But what I thought was interesting was the Japanese market, the Nikkei. That made an all-time high in July, 11th of July, up at 42.5 almost. And here we are today down at 35 and a bit. So that's seen a massive sell-off, 15%, 16% sell-off from those highs. But again, the trend is still up. The trend from 2023 is still up. So the question is this a pullback and a buying opportunity, or is it actually the start of a bear market? And I am still leaning towards the pullback side of things, but let's see. It's a scary old move to sit through, isn't it? Imagine if you'd have bought the Nikkei as a long-term investment early July, and you're down 16% in early August. It's not a good start, is it? But let's see what happens. So I've got a really itchy nose. Hang on a second. I don't have a dodgy drug problem. I've just got an itchy nose. So that's that. If you look at the French index is down to lows for the year. I thought that was interesting this morning. The trend in the CAC 40 has been up. That's the trend since COVID time, the March 2020 lows. And the old French index, the low for the year was in mid-Jan at 72.80, and it's pretty much where it is now. So I think that's interesting. Are we going to see that bounce next week? German market, pretty much the same, had been holding up better than the French market, but some levels to watch next week. I think 17.4. If we saw this market sell off much more than where we are now, that's mid-April levels. So loads to watch in stock markets. Hong Kong, I'm still waiting for the buy signal here. It's not happening. It's still just edging lower. I was thinking, I think I've mentioned it before, the Hong Kong Hang Seng, had been in a downtrend since Feb 21 into April 24, breakout, pullback, and I was wondering, is it going to go do and up we go? But for now, it's still edging lower. So for me, there's no trade there just yet. So yes, lots of turmoil in stock market indices so far. So an interesting rest of the day and an interesting what's it next week. The dollar had been, look at that today. I mean, that has nosedived today. But there we go. But that's the daily chart that we're looking at now. In the great scheme of things, it's still pretty sideways. That's the last 4 or 5 months for the dollar index. So a bit sideways overall. Dramatic move today. Interesting. Now we're coming towards the bottom end of the range. Do we see a bit of buying coming in next week? I don't know. But still weak today. Absolutely clobbered today. So it's been quite. I think it's been quite a messy week for the dollar index. It broke out on Tuesday, out of this range it'd been in before, and then it's dropped back into it, and now it's broken out and collapsed in the other direction. So tricky old one, the dollar index. If I talk, let's have a quick look at what else should we look at. Dollar yen. I saw someone mention dollar yen. I was waiting for the bounce in dollar yen. It is not happening, is it? Look at that. So dollar yen, been big uptrend in dollar yen going back for as long as you like. The latest leg of that uptrend started in end of last year. So we're 7 months into that. We were 7 months into that. We had, so it hit an all-time high. I don't know if it's an all-time high, but a multi-year high. 3rd of July at 162. And here we are at 147. So it's dumped 1,500 points. So not far off 10%. Big old move for a currency pair in a month. We had that surprise interest rate hike from the Japanese central bank this week, didn't we? So again, big level to watch on dollar yen, 146.5, which is only 70 points below where we are now. So that's another one. There's lots of markets. I put it in the WhatsApp group this morning. There are lots of markets for me at the moment that are sort of wait and see for next week. So yeah, interesting to see what happens. Do we see this dollar weakness calm down a little bit and start to build a base down here? And obviously impact other markets, pound against the dollar. This was interesting. I put this in the group yesterday. This trend in pound against the dollar that's been going since April, it came back to the trend line yesterday. We have seen it turn around today because of that dollar weakness. I mean, that's another interesting one to see next week. Watch next week. Do we see the pound manage to stage something of a recovery? So loads to watch, but not a lot to do today. Not for me anyway. So we'll see. We'll see what happens next week on those currencies. But let's go back and look at gold, because that will be gaining because of the dollar weakness. I mean, gold did break out to an all-time high again in July, sold off a bit, and here we are again, threatening that all-time high. So for me, if we looked at, we do have, quite a few uptrends on gold, depending on what time frame you're looking at. And then obviously the sharper uptrend since then, and blah blah blah. The only question for me is, where would you buy it? If you bought the last breakout in gold, which is a valid strategy. So you bought it here at 24.67. It sold off $100 before coming back up again. So for me the question always is, where does my stop go? I'd much rather, if it breaks out and pulls back, I'd rather buy the pullback. But at the moment, I can't really argue with the bullishness on gold. because the market is nearly at all-time highs again. So that's going to be really interesting to watch. Silver, don't know what that's done. Let's have a look at that. Sort of just not a lot, really. I mean, the trend is up on silver. We did see this 2680 level hold. I don't trade silver, hardly ever. Oil, I did I'm sure oil. It's worked wonderfully, this has. This was a really logical short to do. I did it here yesterday. Put it in the WhatsApp group, obviously. And look at that, it's just absolutely nosediving. But it was a really logical short to do on oil because the trend had been down. We had that move on Tuesday to a new low. And then we had that massive rally, relatively speaking. It rallied about $4, $3.50 on Wednesday, and it stalled. And I thought, well, that's got to be, if there's a level to go short oil, this is surely the level. So I went short. I gave it a wideish stop to start with, and it's worked really well. But if we go and look on the dailies, it's been another market, I think, that's been a bit sideways this year. I did a video on oil on Wednesday. That's on the channel, looking at the short and the medium term. And that's what it looks like, So I think it's interesting going into next week because we did see oil turn around in early June around just the other side of $73. So I think that's interesting. So I've got a trailing stop on that short now. Quite a tight trailing stop. So I'm up about 1.5 times my risk, just looking at it over there. So that's worked well, that trade. But I am wary that it might start to turn around next week, oil, because we're back down to these old levels. Clearly, it's been spooked today by, I would guess, the lower than expected jobs added in the US, perhaps suggesting that the US economy is not going ahead at the same sort of pace that some people thought. I don't know. Let's see, though. Let's see what happens next week on oil. Natural gas, I did a video on that the other week as well. I mean, the trend is still down, I think, on natural gas. We got these. I did wonder if this sort of 2 area would be support. It hasn't been the case so far. It sort of did from the middle of July, but it pushed through it yesterday. So on natural gas, I'd still rather be a seller than a buyer of that one. What else? There is a lot to look at. Like I say, I think for me, there's a lot that's wait and see. Copper was interesting this week. Copper again up here in May. These were all-time highs on copper, or multi-year highs. I think it was an all-time high, up at 516. And in the last couple of weeks, it's traded down to 4. So it's dropped, 20% and a bit more since those highs in May. I was expecting the bounce all the way down, and it never really happened. But again, copper, do we see it perhaps try and make a base down here at 393, 4, something like that? Let's see. Palladium, no, not palladium, platinum. I should have bought it this week. I might still have a chance to buy it though, because I did think after this decline here, was it going to turn around? And I was humming and hawing and didn't do it. But maybe there's still a trade in there. And my reason behind that is that the trend since November on platinum, is up. We did have a high for that trend in May. So I am taking the view that all of that is a bit corrective and we'll see it bounce again. So I think that's an interesting market to watch. Bitcoin, not doing a lot really. The big trend is still up on Bitcoin. But it's all a bit sideways, I think, Bitcoin. So there's not a lot going on with there. And other stuff, other markets. The other trade I'm in, this has worked really well. I've been in this trade for 2 weeks now, but US Treasury bonds. So put the trade on, 15th of July I put the trade on, in here. Was up a bit, was down a bit, and then it's really got to move on over the last week and a half, T-bonds. And the bond markets are interesting, I think. I think bonds are things that lots of private investors won't trade, retail investors won't trade, but they're really well worth looking because at the end of the day, it's just a market like anything else. So this is the US T-bond, the US Treasury, big downtrend. When's that downtrend going back to? March 2020, right? So there's a 4-year downtrend in treasuries, and cue the fanfare. Today's the first day we've seen that trend line taken out. in 4 years. Now, I would say, look, the thing's been going down for 4 years. Is a one-day break of a trend line time for us all to remortgage the house and buy UST bonds? No. Let's wait and see what happens. But again, I think it's another really interesting one going into next week. I'd say the big level on the dailies at the highs just at the end of last year, around about 126 on UST bonds. If you wanted to go short T bonds, there's an opportunity there, I think, again for next week for me. But that's been a really interesting market. You look at bunds, the European bonds. Again, we've had this good trend in bunds. Big move today in bunds. Back to the highs from February. And even over here for me in the UK, UK gilts have had a bit of a run as well. Gone from 98 to 100.5. So they've moved 250 points in the last week. So bond markets, I think there's always lots of interesting stuff going on in those. So well worth a watch, I think, all those things. So yeah, that's that. So that's the stuff that I'm looking at. So as usual for me, I think these stock markets are getting a bit hammeroonied, aren't they? Yes, they are. So as usual for me, it's stock markets, and I think it's interesting because at the moment, I do think this is a correction, not the end of the trend, but it has been and continues to be a pretty brutal couple of days. Let's have a look at Intel. What's Intel doing today? Because they had earnings last night, got clobbered in the out of hours. So where did they close? They closed at 29, and now they're at 21 because they're laying off, did it say 15,000 people? Something like that. So what's their stock down? Not quite 30%, but 25%. Apple, I must admit, I didn't follow the earnings. Let's have a look at the market reaction. Apple seems okay. Amazon, what's happened with those? Oof. Poor old Mr. Bezos. He's going to really feel that in his wallet, isn't he? So 184 to 162, so that's down 10% and a bit more overnight. Microsoft, was that early in the week? I can't remember. Nothing too dramatic there. Right, Google, what's that doing? Google, and let's have a look at Nvidia. Google's not doing much. Nvidia, is that getting a bit of a hit off the Intel? Okay, I mean, it was closed at 100-ish, 101 yesterday, so it's down a bit today. Interesting though, loads to watch, but for me, particularly with stock markets, there is a lot to watch going into next week. So yeah, and it's looking a little bit ugly today, unless you're short, in which case, happy days, isn't it? I think the oil price is tanking a bit as well. Oof, that's really taking a hit, isn't it? Happy days. But yeah, for me, I think if all I watched is stock markets next week, I think there's plenty there to keep an eye on. What we'll do now is take a look at any stuff you want looking at. If you want to find out who I trade with, particularly for short-term trading, they're good because they've got tight spreads. Go to bit.ly/David Trade. Again, that link should be in the descriptions. For all the other stuff, go to the website, davidjonestrading.co.uk. And don't forget to use the code YouTube for a 20% discount off the first month's subscription to the WhatsApp group. And it is only month by month. So if you hate it after a month, you can cancel. People don't. I would say perhaps only 1 in 20 do that. So yeah, but try it anyway and see. Try the WhatsApp group and you get access to those 2 webinars. Right, let's have a look. What are we going to look at? Update on Shop and AMD. Shopify. I bought these of the week, didn't I, on the YouTube stream? And it doesn't look too pretty today, does it? I'm still in the trade. I would give the trend, I would still take the view. I never believe the first break of a trend line, okay? So I would still be happy to be a buyer. I'm a little bit concerned it's gone below the 56 support. If I was a buyer now, I'd be stopped below 45, but I wouldn't buy it today. I would wait for things to calm down. But yeah, that's that break below that support isn't good. If we saw markets snap back, then we'd see perhaps more of a recovery. But for me, I'd still be inclined to be a buyer, but I'd wait for this dip to calm down a little bit. AMD, Advanced. I looked at this for someone in the WhatsApp group this week. It's getting a bit messy, isn't it? I mean, it's had a great run. This was on my list to buy I think, coming into the summer, and you could absolutely argue, if you took the trend from like there, that the trend is still up. But, you know, the thing hit a high in March of 227, and here we are at 135. So it's not lost really $100, isn't it? So it's dropped. I mean, it's not dropped quite by half, has it? But it has dropped 40% or so. And again, I would have expected this 140 level to hold. So I would just be, again, perhaps a little bit nervous here. You know, what would you do? If I was looking to sell short, if I thought this thing's going lower, I would sell a rally today and I would put my stop above 160. That's what I would do. So if I was going short, that's what I would do. I wouldn't want to be a buyer yet. So if I had to do anything, I'd look to go short at the moment, although you could argue that trend is still up. So I think it's a lot harder at the moment than it was at the beginning of the year, because the question is, are we just seeing a correction or are we going through actually a market turnaround? And of course, so many of these tech stocks have perhaps become somewhat bloated. I got this alert off the FT just before I started the live stream, and it says Nvidia is in a bubble and AI is overhyped. And I thought, no, Sherlock. Yeah, I think we all know that. We think there is always an element of bubbles in certain markets, and this year, all a company, or the last 12 months, all the companies had to do is drop AI into their earnings and get a boost. Ironically, above this thing. Nvidia in a bubble, AI is overhyped. We've got an advert for AI. Turn AI patterns into profits. I bet that's some trading nonsense, isn't it? So yeah, there we go. Hedge fund Elliott Management has told investors Nvidia is in a bubble and the artificial intelligence. Okay, so what should we do? And should we sell? And where's it going? Okay, many of are never going to be cost efficient. Blah blah blah. Okay, it comes a warning. But what should we do, though? We want to know. Where's it going? Oh, well, that's no good, is it? But yeah, I don't think that story is really telling us too much we didn't know anyway. So it's tricky, I think, with some of these US stocks at the moment. Dollar yen, massive sell-off. Yeah, we looked at that, didn't we? Sailing through all those previous lows. Oof, it's nearly there. Divergent fiscal policies now on dollar yen. It's not going to bounce back, in my opinion. Fair enough. Do you think that the fixed risk, do you think that the fixed risk to reward ratios are important in trading, David? Won't trailing stop losses reduce the winning percentage of trades? It's a good question. Risk reward is really important to me, and that is why I use trailing stop losses. So for me, I always want to have. Okay, let's take an example, right? Let me. And it is hard, but then trading is hard, isn't it? Let me give you this T-bond example I'm in. Where is it? Let me walk you through this trade. So I bought T-bonds on the 15th of July, right? In here. Let's say I bought them there at 119, right? The market went to 120. So I was up a decent amount. Let's say my risk was 500 quid. I was up 400 quid at this point. All right, so my risk on the trade might have been 500 quid. I was up 400 quid at this point. If I'd have taken profits there, I'm taking profits too quickly, in my opinion. Yeah, I'm risking 500. I'm taking profits at 400. That's no good. Then the market went here. I was down 350. So I've gone from plus 400, for example, to minus 350. And now the market is up here. I'm at plus, again, based on a 500 quid risk, about plus 1200. So for me, this has turned out to be a good risk-reward trade. But the reason it's worked is because I've had a trailing stop, because I've not decided to just come out of it willy-nilly. So for me, risk-reward is really important. I always want to have at least the potential of twice the reward versus my risk, if not more. The thing that makes the big difference to my trades over a month, I think if you go back to some of the videos from perhaps this time last year, when I was talking a lot about the trades I was doing, is one or two trades that really blow the roof off. For example, in May, the really big winner I had this year was there in May. I think it was the end of May, right? I was in Australia, and I did a trade. It's about 10:30 in the hotel bar in Australia, right? So it would have been about 1:30, 2:30 UK time. So I don't recommend doing trades in a bar. But I bought the S&P thinking, the market is just going to go running away from it. Anyway, I ended up being in that trade, I think pretty much all the way up to here. So I made 7 times my risk on that trade. That's been my biggest winner in terms of risk reward this year. So if you can make, 7 times your risk, well, not 7 times, 3 times your risk on a trade, it makes up for some losing trades. So if in a month you do 10 trades, you have 5 winners, 5 losers, but one of them makes 3 times the risk, it makes a big difference. So for me, risk reward is absolutely critical. This S&P is getting absolutely clobbered. Risk reward is critical. Trading stops. 99% of the trades I do, I come out of them on a trailing stop. So I never decide to just bail out willy-nilly. So I come out in a trailing stop, and it's all in my trading course. If you go in the trading course, you find out all about it there, my approach there. And it works. It doesn't work all the time, but it works enough for time to be profitable. And if you're in the WhatsApp group, I talk about where my trading stops are and everything in the WhatsApp group. The big mistake people make, it's really, I'm probably repeating myself here because it doesn't change over time. The big mistake, the reason that most people lose, one of the big reasons, they take profits too quickly. Yeah, they'll happily risk 300 quid on a trade, losing 300 quid on a trade, but when they're 100 quid in profit, they'll snatch at the profit, scared it's going to go away. That is never going to work. Whether it's AI.com, crypto, whatever it is, that sort of approach isn't going to work. So it's really, really fundamental. So yeah, so stop losses, trading stop losses, really important to me. The Russell, we looked at the Russell, didn't we? Oh, look at that Russell. There it is on the hourlies. I mean, I would, if I was looking at the dailies on the Russell, there's the dailies, I would be a buyer, but just not yet. Not today. Once I finish this today, I'm going to go out for a walk. I'm not going to do anything. So yeah, for me, there's no trades today in stock market indices. I should have been short anyway, but I'm not. And things need to calm down a bit, so I think it's going to be really interesting to see where it finishes. But the Russell, I'd be a buyer, when it stops going down, because the trend is still up, So I think that's another interesting. And there's so much to watch next week. We have these lows for the Russell, just the other side of 2,000, the small cap index. Interesting to see what happens next week. So it's going to be a really interesting week, and there'll be loads of updates for people in the WhatsApp group. So get yourself in the WhatsApp group after this. Short Heli. What's Heli? We looked at those before, didn't we? Helen of Troy Limited, Nasdaq. Oof. Yeah. What do they do? Consumer durables. Yeah, so they've been trending down since forever, haven't they? So they peaked in January 21, 3.5 years ago. They went sideways for a bit, and they crashed through 81 on their earnings. And they're just going down. So yeah, I would go short. As usual, the problem is, where does your stop go? I would want my stop above 66.5, which is a 20% plus stop, but that's because it's a volatile stock, isn't it? So yeah, I would be a seller of strength on that. Can we have a look at Super Micro? I looked at that this week for something. Super Micro. SMCI. What's that? Canadian dollars? That's not the one, isn't it? Hang on a second. SMCI, Super Microcomputer. Ouch. There was support, wasn't there? I thought that's why I was looking at it this week, because it came up on my list of things to trade, but I thought, I want to see it move away from that level, that 670 level. So, yeah. I mean, that again is pretty bearish, isn't it, at the moment? That has halved, hasn't it? Since those highs in March, that has halved. And, for me, I'm like Kevin, it's too volatile for me, that one anyway. Because where's your support going to go? It's going to be all the way down here somewhere. That doesn't mean it's going to go all the way down there, but for me, it's difficult to come up with a trade for that. So what would I do? I'd want to short it again. I don't think it's going to necessarily halve again, but looking at the the price action and the trend over the last couple of weeks, I would go short with a stop somewhere above 725, which again is a big old stop, but it's moved $150, $130 in the last couple of days. That's 20%, isn't it, nearly? the last couple of days. It will be interesting. You know, maybe this is the top. We don't know. We won't know until, I don't know, where are we now? August. We probably won't know till November if it is the top, you know, because these things usually take a while to unwind, don't they? But yeah, I'd still be a buyer of the dip. But on some of these stocks, you know, that had gone up so much, where was Supermicro? Came into the year at just under $300 and it quadrupled by March. I mean, it was all a bit nuts, wasn't it? But yeah, I don't know where they stop these stocks, but very exciting to see what happens. And that's it, really. There's no more questions. We are all done, and I can go out for my little afternoon stroll with a podcast and come back and see where all the carnage is in a couple of hours. But you know, to be serious, I mean, there's a lot to watch here. But for me, it is very much let the dust settle day and see what happens next week. I mean, these I should have been short that market from yesterday. You know, these markets, they have been absolutely clobbered. You know, if I was going to go short the S&P now, if I went short now, where would my stop go? Well, at the absolute closest I would want it is the other side of today's in-session high. And today's in-session high is 53.83. You know, so I'd want an 80-point stop, and we're only 40 minutes into the day. You know, so I'd rather sell a rally on the S&P. The risk is, of course, the rally doesn't come and the market just nosedives. But yeah, so, you know, one of the things I've learned over the years, you know, what's right for me is not to chase the market, to see where it is. But it's going to be a really interesting August. The summers do tend to be quite interesting, I always find. I think August, you can get quite a bit of volatility. I remember I had a horrible first 2.5 weeks of August last year. I think every trade I did was wrong. But this has started a bit better than that. But now it's going to be really interesting. But these are, you know, US stock markets are taking a fair old beating, and this Nasdaq is only 300 points away from what I consider to be good support. The DAX looks like it's had a bit of a tank day. The French index is on new lows for the year, sacre bleu. So they're back to where it was end of November last year. That Japanese index, I mean, that really has been absolutely clobbered the last couple of days. So loads to watch. What's gold doing? Has gold gone out to new all-time highs? Not yet. Yeah, lots to watch. So for those of you in the WhatsApp group, I'll do an update in the next 20 minutes. But otherwise, we're done. Okay, so crazy markets. Let's see where we are next week. I should be here next Friday. I might be going away for a little bit next week, but I should be here on Friday. But if I'm not, then I'm not. But to find out more about the WhatsApp group, find out who I trade with, go to davidjonestrading.co.uk or go to bit.ly davidtrade. Interesting times. Let's see where we are in a week's time. You can always email me, my email address, if you have any questions. If you send it to dj@davidjonestrading.co.uk, that will always get through to me. But otherwise we're done, aren't we? So yeah, let's not lose all our money next week, and let's see where we are this time next week. Have a good weekend.